So I'll bring you in on that as well. Do stay with us. You know, the Chinese economy has depended on exports for its growth. Its low cost of production as well as access to global markets had made it a considerable player in global supply dynamics. Back home in China, consumption demand was slacking. The property market had crashed. An aging population was beginning to hit labor markets, and it was adding up, as a serious deceleration of growth. So much so that questions are now being raised about whether the world's second largest economy has peaked. Let's look at this report.
The economic rivalry between China and the United States has been a topic of intense interest. In the first quarter of 2024, the US economy expanded by 1.6% year-on-year, down from the previous quarter's 3.4% growth. China's economy showed signs of recovery, posting 5.3% annualized growth for the same period, slightly higher than analysts had predicted. The US economy relies on consumer spending and a robust job market. China faces challenges due to a property sector crisis, declining foreign investment, and tepid consumer confidence. The International Monetary Fund projects the US to finish strong with a 2.7% GDP annual growth. They believe China can meet its target of around 5%.
I think the growth target of 5% set by the government is still achievable for this year, though more supportive measures may be needed. I think the government can certainly roll out more programs to boost consumer sentiment.
But the Chinese economy faces several complex challenges. China's rapid growth over the past decades has slowed down considerably. Beijing's efforts to stimulate growth may fall short, affecting overall economic performance. China's debt levels have also risen significantly. Balancing debt reduction with economic expansion is a delicate task. The heavily indebted real estate developer Evergrande's crisis highlights the risks. An aging population poses challenges for labor force dynamics, pension systems, and healthcare. Urbanization remains a powerful driver, but managing migration and ensuring quality of life are crucial. Then there are environmental challenges. Balancing growth with sustainability is essential. Trade disputes with other countries affect China's exports and imports. A deceleration in China's economy is impacting suppliers, workers, and its technological competitiveness.
I think what we're going to see in terms of the way China looks in the future is we're going to see the onset of the digital economy.
China's economic future hinges on addressing these multifaceted challenges. China faces more challenges than anticipated that may make it harder for the world's second largest economy to overtake the first. Also, several measures of President Xi Jinping, like the Belt and Road Initiative, are not meeting their desired goals. The Economic Brief, DD India.
Let's turn to our expert once again. Dr. Charan Singh is with us. Dr. Charan Singh, do you think China's economy has peaked? Japan too at one time was expected to overtake the United States, but we know that that never happened. So do you think that China too is never going to overtake the US?
My own gut feeling is China is not ready to overtake US, not in near future. And China has a long way to go in doing that. Please also remember when we say taking over the future, it's not the GDP where China is number 2 compared to USA, but it's also the per capita income. And if you look at the per capita income, America's per capita income is 80,000 plus. China is, I think, around 12,000 or 13,000. So there's a very big gap between the two. So that's not going to be easy. As far as the absorption of global growth and exports are concerned, as you know, that America today accounts for nearly 22% of world GDP. China, of course, accounts for about 13 to 14%. But the currency strength that America has and the resources that America has are immense. One of the indicators that I mentioned to you is per capita income, which shows the adoptive capacity of the people. So the reserve currency status in each coffer of the central bank of the world, you will find US dollars sitting there. The foreign exchange reserves composition, the international reserve currency status that USA has enjoyed for nearly 75 odd years now is difficult to parallel. In contrast, while the American economy is going strong, even now, despite all the odds since the Lehman Brothers happened, you find that American economy, despite the slowdown, is in the range of 2.93%, which is very, very large and very, very strong. The disruptions that are taking place in the Chinese economy are immense. As you mentioned, they experimented with the one-child policy. That was a disaster. The aging population is so large that the burden is massive. Also, please remember, the construction boom which was happening in China was not really required there. It was exceeding the requirements. That has come home to roost now. There's been a crash in the market, in the real estate market, as your report also showed, and that's going to take time to recover. If you look at the projections that have been made for China, they are all petering out. Now, it is not only now that the world is thinking of China crisis. I was at the IMF in 2009 to 2012. Even at that time, the fear was that the China bubble is going to burst.
Right. Dr. Charan Singh, Adam Smith had said that markets need to expand for growth to take place. So do you think that the Chinese supply side is, unable to find new markets? After all, that's what they were doing. They were growing by exports. And the Belt and Road is also not being talked about very much anymore.
There are 3-4 things which play a very important role in a country becoming or assuming the role of a global economy. The most important thing that one has to keep in mind is that China's growth was not really based on fundamentals. I have absolutely no qualms in mentioning. Many economists have expressed that fear for a very long time. The way they built their foreign exchange reserves, the way they killed the global manufacturing, they were manipulating their exchange rate. Many economists have already written about it at length. Now, when the fundamentals are not very strong and you are manufacturing at a certain rate but subsidizing it heavily and putting it into the international market, one day or the other, that is going to come up and show. And that's exactly what is happening now. The system, the autocratic system of production that was taking place, it was not really very competitive. The scale of production was very large, and that is why they could compete out, and the subsidies were very large, and that's why they could compete out manufacturing from the rest of the world. But if you open them to the competitive environment that the rest of the world had, they would not have been able to compete. Of late, the sentiments that have happened against China for various reasons, including the recent pandemic and even otherwise, the thoughts in the mind of people, global policymakers, that China's strategies, the data, the statistics is not very transparent, not very robust. That has now started playing a role. And that's why you had the China Plus. So when Adam Smith said about the markets, he really meant about the markets which are transparent, which is where the productivity is strong, and which is transparent to everybody to see the cost factors, the input story, everything. But in the case of China, that was not happening. And that is why the sentiments against China are reflecting against the absorption of exports from China.
Okay. Then, Dr. Charan Singh, can the United States, on the other hand, regain some market share in global markets? Because apart from the huge market for the US dollar, as you were mentioning, all the reserves, it's the reserve currency of the world. If we look at it as a commodity of influence, how long will that carry on? After all, that's what's pushing the US economy also to a large extent in international markets.
I totally agree with you that over this last 5 years, American economy has emerged rather stronger relatively to its competitors. There's absolutely no doubt about it. Will it regain the market? Will it regain the market share? I must mention there's a political cycle which is taking place in America. As would be anticipated, the projections and the scenario analysis, if the current regime continues, they have a different trade strategy. If there's a Republican president, they have a different trade strategy, and they have a different production strategy. Okay. Now, keeping that in mind, one has to then make a projection as to what will be the global share that the Americans would like to, or Americans would like to target and aim at. Please also remember, there are some problems happening in other countries which are number 2, number 3, like there is an automobile plant shut down in Japan for various reasons. So you find that even globally, there is a competition which is eating into different countries for very different reasons, as you know it.
Sure. So,
And
a final word, Dr. Charan Singh, how best can India fill the gaps in its rise to become world number 3 in terms of economy size?
I tell you, it's a God gift. China is, as was expected long time ago, is going to go down the hill. It has started going down the hill. Japan, which was already also holding a very tight position, you find aging is also a big problem in Japan. And in Japan, there are supply disruptions which has impacted Japan economy. So Japan obviously is on the downside. As far as America is concerned, given the change in the political system and the rapidity with which the change is taking place in their ideology, in their presidency, if projected correctly, then you find there's lots of uncertainty in America too. Given this scenario, people have already been talking about China Plus. Given this scenario and given the backdrop of India emerging as a very strong economy, growth, stability in policies, and robust financial system, banking as well as the market, I think India now stands a very strong chance of coming back into the system. I think India has to play its macroeconomic policies very carefully, both monetary and fiscal, and I think it has to use its trade missions across the world to put in a word, and I think India now stands a very good chance to get that role quite rapidly.
We'll have to leave it there. Thank you very much, Dr. Charan Singh. Thank you for joining us and throwing light on these important subjects, especially the situation between China and the United States in terms of economies, as well as India's rating. Thanks very much for being with us. Let's move on.